Last week, the stock market had an incredible move to the upside with the SPY and the NASDAQ closing just over 3% off of its all-time highs. We started out the week with Trump and his team, Besant, talking in Sweden to Chinese officials, and they finally came to a temporary agreement where we were going to stop tariffing each other. It's not doing any good for anyone right now. China slashes their tariffs for 90 days. So does the United States, and that is what sent us on a roll to get us going. The U.S. will lower tariffs to 30% during that pause, in which China will also cut its tariffs to 10%. A remarkable deal by the Trump team and Besant, and we just continue to keep on rolling. Not to mention, we had a big victory as Trump continues to make deals in the Middle East. The United Arab Emirates is going to be, the Saudis are going to be investing around the tune of $600 billion with AI and, U.S. Companies. So all in all, a pretty good situation to be in as we roll things out and get further into this administration. We also had a pretty hefty economic calendar week. We had CPI, PPI, retail sales. All in all, we saw that CPI came in slightly under at 0.2% month over month, or 2.3% year over year versus 2.4%. A nice cooling number. We also got our PPI, which came in remarkably lower, minus 0.5% month over month on that PPI versus 0.0%, and core PPI coming in at minus 0.4% versus 0.4%. All in all, April's inflation data and producer price prints definitely show a cooling price pressures, but we still have some of those services industries being a little bit sticky. We also got our retail sales that came in at 0.1% versus 1.7%. Yeah, the retail a little bit weak there. You could say that retail spending has plateaued a little bit. We also got some commentary from Powell last week, and he says that it is time to reconsider monetary policy strategy. He only spoke for about 7 to 10 minutes on Thursday. Nothing new came out of him. It's just a revisit to the 2020 framework that has been navigating the Fed to achieve their dual mandate. But he said that the weeks, it is time to, reconsider their policy, and all the data that we've continued to see is giving us a confirmation that the Fed needs to continue to have a wait-and-see approach. Disinflation is still on track, but the central bank still wants clearer evidence that both prices and demand are sustainably slowing before even contemplating Fed rate cuts. And even when we look at this chart here, we can see that the current Fed rate is 425 to 450 basis points. Now, we are not expecting a rate cut in June, and the only time we are expecting, we're not expecting a rate cut in June or July. We are expecting a rate cut in September, and then the odds get a little bit weak for another rate cut in December. So we're still kind of teetering on one rate cut, for sure one rate cut, maybe two by the end of the year. Originally, when we started out this year, the market was anticipating 3 rate cuts. That is definitely no longer the case. So all in all, a pretty good move this week as we jump into the charts. Actually, before we jump into the charts, let me dive into next week's economic calendar. It's relatively quiet compared to this week. Got a few Fed speakers, and then Thursday we just have unemployment claims and flash services and manufacturing PMI on Thursday, and then new home sales on Friday. All in all, pretty quiet week. But you know what? This week we had a huge week. Like I said, the SPY closed up down a little over 3% from its all-time highs at about 613. We did get that gap up. Remember, last week it was all about the battle of the 200. And guess what? We got that launch on Monday thanks to that tariff news Sunday night into early Monday morning. Besant had his conference at 3 in the morning. I happened to be up at that time, so I watched it. It was a fantastic news section there, if you want to say. But all in all, I mean, look, we gapped over the daily 200, and we continue to make progress to the 600 level. Above that, we do have 613. Now, we are a little bit extended, so I would be a little bit cautious at buying here. But if you are in at the moment, you know, this is the time where you start to trail your stops, position a little bit lightly. I would not be going heavy and slamming the buy button here. I would just be waiting for a nice little pullback, whether that's to an hourly key moving average or to key support. In fact, I have been, you know, maybe teasing this idea where we retest this daily 200, and from there we can ramp back on up. So I would like to see a retest of that breakout, and especially that daily 200. We'll see if we get that or not, but all in all, the SPY continues to be very strong here. We are back above all the key moving averages, and that is definitely important. We're above the daily 200, we're above the daily 21 EMA, above the daily 50. We still don't have that bullish crossover of the 50 and 200 just yet. That will definitely take some time, but we can see that the daily 50 is curling up here ever so slightly. So we'll see as time progresses if we will get that bullish crossover or not. Moving on to the QQQ, the NASDAQ ETF. Again, all last week, you know, we were battling with this daily 200 simple moving average, which is this gray line. We got that gap above, and we just progressed further. We did get a little bit of sideways movement, slightly grind higher on Wednesday and Thursday, but Friday we finally moved to the upside. Again, we are looking to possibly break into new lifetime highs at about 540.81. We'll see if that comes to fruition. Again, I would like to see a little bit of a pullback or some sort of consolidation before moving higher. That is healthy. That is not necessarily a bad thing as much as you would think. Now, when we look at the small caps still have a little bit of catching up to do. But if we start to see some rotation, we could see some a good movement out of the IWM. It's got this nice little resistance level at about the 210 mark. If we get above 210, I am definitely looking for a push into that daily 200 up towards $216. Now, when it comes to the Dow is pretty interesting because we did get this little fight at the daily 200. It was pretty much being brought up due to the NASDAQ and the SPY. But the Dow definitely was being hindered this week because of UNH getting hit left and right. You know, are they getting investigated? You know, what's the deal with the new CEO? You know, Medicare, Medicaid fraud. What exactly is the deal? And when we look at the weekly chart here, we can see that it's almost down to COVID lows, down at about the 208. We did close down at about 286 in the pre-market here, closing near 300. But you know what? When it comes to the stocks like these, you know, I know it's tempting to try to nail the bottom, nail a big reversal back to the upside. But just because it's beaten up and because it's oversold on every single metric doesn't make it a good buy. What is oversold can continue to be oversold. So we still need to see some sort of major reversal pattern. ultimately, this thing can continue to go lower, and I urge you to just be cautious out there if you are trying to long this or trying to swing long. Sure, you can get a nice little win out of it, but I wouldn't be looking to try to swing for the fences and, make it to go all-time highs. But if you are a long-term investor, 208 makes a lot of sense. There's a lot of good support down there, especially from the COVID lows, and we know UNH is a major player within the market. But you know what? If you're looking at healthcare, Cardinal Health, I mean, this thing is at fresh all-time highs. It looks fantastic. Boston Scientific, another health name out there, XLV, looks pretty darn good. Near lifetime highs at about 107. This one's going to be on watch. And when we dive into these sectors, I mean, look at industrials. Industrials are at lifetime highs here. If we can mark that, just shy of 144.50, it closed at 143.80. If we look at utilities continue to be impressive, also nearing lifetime highs. Financials continue to be impressive. We've been talking about Schwab continues to be moving on to the upside. Wells Fargo, Bank of America, JP Morgan, Goldman, they all look pretty darn good. Visa is at lifetime highs, sitting at 365.12. MasterCard looks pretty brilliant here as well, 583, possibly looking for that 600 number. Discover Financial, this one is interesting because Discover Financial got replaced by Coinbase on, on Wednesday or Thursday, and look at Discover Financial. It's barely phased. We did have this huge volume node, but nothing has come of it as of yet. If we do get a close above 205.50, I'm looking for this to, continue to break out into highs and even take on the 210, 220s at least. So we got some good relative strength here within some of the financial names. American Express, probably not the one I'll be playing, but Discover, Visa, they all look pretty darn good to me. If we look at Bitcoin looks like it is taking a little bit of a breather here, getting a nice little flag pattern. If we can flag out of this, we could very well see another push to the lifetime high at about 108,500. So be on the lookout for crypto this weekend. And of course, if you're looking for, if you don't want to buy Bitcoin outright and you want to play it in a different fashion, you can always play MicroStrategy. MicroStrategy just needs to break out a 423, 425 zone to push into that 450 mark. So MSTR looks pretty good. Coinbase is interesting. It's not as pretty as MSTR if I want to make that argument, but the setup is definitely there. We had a nice close on Friday on a huge volume. So if coin can continue that push up, my next zone here to really retest is going to be 300, and Coinbase could have a lot of making up to do. So we got a lot of goodies to kind of keep our eyes on. Costco breaking out, finally closing above that 1,020 mark, making its way to fill that gap at 1,020. If it wants to continue to the upside, my next target for Costco is about 1,050. It did kind of spook some people out when we broke out and moved back down to the daily 21 EMA, but she has recovered nicely and has moved on up. So I still like Costco as a nice bullish setup. Walmart also had good positive earnings, but we do want to keep an eye. The CEO did mention the negative impacts of tariffs, so that is something that we need to continue to keep an eye on, especially if Trump's administration can't solidify deals within really these next 90 days or so. Walmart is definitely going to get hit, but as it sits, as far as a setup goes, it looks pretty good. We just got to clear 100. There's a nice little gap to fill towards about 104. Anheuser-Busch InBev, look at this. if we zoom out here, this is going to be a weekly chart. Zoom out here, we can see that $67, $80, $68 is a pretty stiff resistance level, but all in all, it's looking pretty good. If we get a push above 68, could see a move towards that 70 mark, so I am keeping an eye on Bud. It is a pretty lightly traded name, so shares probably recommended as opposed to options. But John Deere, nothing runs like a deer. Look at this thing. This thing is breaking out at all-time highs on positive earnings. Solid name out there as well. Snowflake, yeah, looks pretty good. 184.30 to break out towards 194. This thing can run. Another consumer name, Monster Beverage, breaking out into lifetime highs. If we zoom out to this weekly chart, look at this beautiful breakout of this prior range, 45 to 60. So I'm looking for a move. Your full targeted move is going to be in the 70s. So Monster looks really good. Slower mover, great for shares. If you are looking to do options on here, it is a lower beta name, so I definitely suggest grabbing as much time as you can with a name like this. And then, of course, when we look at market leaders and darlings, Palantir continues to look pretty solid. We had an all-time high breakout this week. We came back and retested 125.40, and it has held pretty well. Continue to keep your eyes on Palantir for another leg higher. Not to mention, when we look at the FANG names, Microsoft is one of those leadership names. We had a huge breakout on earnings, and look at this. It is ever so close to breaking out yet again. Needs to clear 457 for another leg higher. Your all-time high sits at about 468.35. But again, like I said, it is kind of extended. We can see that there's a lot of space here between the price and the 21 EMA. Would like to see some consolidation, some sideways movement, let that moving average catch up, and then we explode, or a nice little pullback, buy the dip opportunity, and let's ramp this thing to the upside. Nothing in the magnificent names beats Netflix. Netflix had a nice little pullback, and you can kind of see that situation here, developing, how Microsoft is a little extended. If we look here, back on last Wednesday's close, we were just a little extended, and then finally Thursday, Friday, and Monday, we got a nice little pullback into those key moving averages, and from there, the leadership kicks in, and boom, you're breaking out into lifetime highs. Now, with all that being said, we've given you plenty of names. You know what? If we can see that market breadth has improved substantially. We can see that 72% of all issues on the NYSE, the NASDAQ, and the AMEX, 72% of those names are above their daily 50 simple moving average. A month ago, this number was like in its 30s. About 50% of those names are also above their daily 200 simple moving average. A month ago, this number was just completely shot, like in the 20s, sub 20s even. Market breadth has been moving substantially. And you know what? When we are talking about possible recession fears are just completely obliterated. A few weeks ago, at the beginning of May, this number right here was at 70%. It is now at 36%. All this done because of trade talks and getting some of these deals rolling, even though right now nothing has really been solidified, but we are making substantial progress on that front. The administration is, at least. So that has definitely cooled a lot of the fears out there. Speaking of fear and greed, you know what? Let's take a look at this. Greed, we are at 71. Look at this. A month ago, we were at extreme fear at 14. So the market, again, this just reiterates the point. Bulls have taken completely over. Now, I'm not saying we just blast off and just, rip your head off. There's always something around the corner, and we definitely got this Friday after close. Moody's decided to downgrade the U.S.'s credit rating from AAA to AA1. They say that they anticipate the U.S. federal debt burden will rise to about 134% of GDP by 2035, compared to 98% in 2024. The administration and pretty much everybody in this industry knows that the U.S. debt and spending is simply unsustainable. Powell has said it. Besant has said it. We understand that this is an issue and they need to get it under control. And as we can see here at the close on Friday, you did get a little bit of a dip. We need to let things open up, see how investors feel about this downgrade, and let things open up. Maybe this is our dip buy opportunity before ramping up. Next week is a quiet week as far as the economic data front. We don't have NVIDIA earnings until another 2 weeks, so this week we don't really have any major earnings, but the following week is going to be all eyes and ears on NVIDIA already. So, like I said, let this market open up, see how we digest this downgrade by Moody's and how that will affect everything overall. But like I said, when we look at this broader market on the SPY and the Qs, we're only 3% away from all-time highs. We're in a new bull market after only, we were officially in a bear market for 19 days, give or take. I'm not too sure exactly the actual number there, but all in all, this is a very bullish market. There's a lot of steam to it. We'll just see if we dip, how far do we dip? Can bulls control it and push back to the upside? Everything out there points to yes, they can. I don't see any major worries out there as of right now. But all right, that's going to be it. I've given you plenty of stuff to chew on. Let them open up, and we'll see where things get going. Have a great trading week. As always, feel free to join us at Stock Dads. Link is in the down low. And I will see you all there. Have a good one. Bye, guys.